All right, hello everyone again to another video here, and this is gonna be such a cool session. I think you guys gonna like this a lot because now we're gonna be starting to talk about entries, right? So I think all of you guys have been super excited to this moment because all of the concepts before is kind of like, oh, it takes a lot of time and I want to get into the trades. But yeah, here's the time. You're gonna be learning the how to enter trades and how to exit and stuff like that. So are you ready? You have your coffee? uh, okay, so let's start, right? So I'm gonna be using the same, like the chart that I drew for the liquidity concept, because this is a very good example what you might be. I mean, you're gonna be seeing on the chart. So like on your daily today, you're gonna be seeing the liquidity, the sweeps, and equal highs and lows, and like all this type of price action. So I think it's a very good example, and I hope you guys understood. So about the liquidity concept, and I hope you guys went through that at least like 2 times, so you guys can get an idea of how everything works. And the more we start to advancing on our course, you see that every single thing aligns and builds on top of the other, like structure, the liquidity concepts, the multi-time frame analysis, the CHoCH, fractal and internal and swing. So you see, like you're gonna need all of the concepts that we have studied. So if like there's no way you could be like taking shortcuts. That's why on the beginning of the intro for the course, I would say, like, if you're the type of person that likes to take shortcuts, this might not be for you, because I'm already concising everything that I learned throughout the years for you guys to understand in a simpler way. So make sure that you have the discipline to go over this as much as you can. So let's jump in to the first example. So I hope you guys remember like about the liquidity that we were talking about, and give me props for the drawing, because this took some time to do and it looks awesome. So all right, okay guys, so we were talking on the last section about liquidity that, like, as price was making higher highs here, and then this was a flip because this was a reaction to this supply area, and here, right here, we broke that zone, correct? So like after we got this break here, just by 1 pip, like this zone is already gone. Okay, so what happened? So after all of this was making higher highs, like it was creating liquidity to be taken like underneath here. So like all these orders and all these orders and money was like resting down here, correct? So now that we know, like we're not gonna be jumping in like on the break here, or like too early in the, like, let's say like, oh, we want to take a pullback and you want to like take longs here. That's too early, right? Remember the concept: push, pull back, push, pull back. Okay, so like remember, like you don't want to be try to long it when price already went all this, like it already moved this much, correct? So like now that we know that we have the confluence, because we had the reaction, the flip, because it's reacting to the zone, and then it broke to the upside, and plus it was creating liquidity because it was just like mitigating here, mitigating here, mitigating here, and then it broke. So it was like it left all the zone here below. Okay, so let's jump here. Like this is a zoomed in concept. I mean, kind of like a zooming area that you can see, which is what is happening here, correct? Okay, so as price right here, right, as we were moving like here up, and then we were on the 1 minute, like this is I want to showcase the 1 minute time frame inside of this box, which would be like part of this move here, correct? So as price was moving, making higher highs on the 1 minute, it left these demand zones. Okay, remember also, like when we were talking about the demand and supply zones, that we need to stack each time frame, the multi-time frame supply and demand creation, okay? So inside of the 4 hour, we're gonna have the 15 minute. Inside the 15 minute, we will be looking for the 1 minute, in this case, demand zones. Because like after, when price was making higher highs inside the zone, it left all these unmitigated zones here, okay? All right, so like, yeah, so it made higher highs inside here, and then it pushed, making like the high here, right? That was the first push. Maybe you were already on a long down here, going up, targeting this area, right? But we did have this area here that with the 1 minute higher highs. Okay, so let's talk about this now. So now that we had the flip, the break, and the inducement, this is an overall price is bullish, right? Like higher highs, higher highs. Overall, the price is bullish. So this is a very good area for you to take longs from. Okay, like of course you need to be doing the multi-time frame analysis and make sure that to know where price is on the higher time frame. Well, let's say that we already checked on the higher time frame, and now on the 15 minute, we know that like price is making higher highs, and this is a very good area because it has inducement. It already mitigated here. It could price was creating liquidity, and now this is a very good area, which would be right here. Okay, so now we're gonna talk about like the risk entry and the confirmation entry. Okay, so the risk entry is pretty much like when you already have all the confirmation you need, everything is aligned, and the zone you want to enter from is kind of like the last point inside of a zone where price should hold if it wants to continue going towards your direction. Okay, it's a little more advanced because you need to be very sure about the area so you can be entering. So yeah, but it can be a very good type of entry because sometimes price can just tap here and go. So let me show you an example, right? So like I said before, we had inducement, break, okay, and we have this induced area here. So price, when it broke this structure down here, we knew that it only wanted, I mean, we have a lot of good confluences that this area should hold. And this would be only a sweep of these areas to continue our move higher, correct? So as we're going, as price is coming back down here, so as we were having the higher highs inside of this zone, so there's two ways we can go about this. Now that we are having like a lot of good confluences, we have the inducement and everything, this could be the last area that price might hold so we can continue the move up, okay? So if you don't want to, if you already have a lot of good positive confluences and you did all your analysis and you know that this is the last part, if price wants to continue going higher, this is the last zone, like, because if it breaks this, it would switch the direction. Like, let's say this is a swing, right? This would be switching the swing 15 minute to the like a bearish, okay? But so like for to enter on a risk entry, you would pretty much like, let's say, like set your order in one of these two guys here. Let's just look at this a little bit. Remember when I also told you guys that on the 1 minute and the 15 minute, all the time frames, we're gonna be looking for the same things. You see, like there's inducement here for this area, and on the 1 minute, like very little small time frame, we're also gonna be looking for the same things, correct? But because like we have this area here that before it didn't mitigate it here, all the way down here, and it created this inducement for this area, okay? But let's say these move a little higher, okay? So like, but because like this price is kind of like far away from here, like, and we are not very sure about that this is an inducement because price already moved a lot. Okay, so all right, but we see that this is like inside of this 15-minute zone, this is the last, remember that this is the here, right? At this area here, this is the last low, which would be like inside here. Okay, so this the zone inside here, this is the last low. If it breaks this low, it would probably start going down from here. Okay, so like because this 1 minute already moved kind of high here, so we're not really sure if this is inducement to this area, to this demand. So but what else do we have here? So we have another inducement because this low didn't mitigate inside of this zone. So let me just delete this. So it's a higher probability that this is the actually the inducement for this zone below here. So on the 1 minute time frame, we're gonna be sweeping this area, sweeping this to come mitigate it down here, correct? So there are two. If you want to take a risk entry, like I said, it's just the risk entry. You're pretty much just setting your entry, your limit entry, in one of these two areas here, targeting, like we were going to be talking about targeting later. Let me try to change this to make this a little more visible. Maybe like this. Yeah, just for now. Okay. So we're pretty much like we're setting our entries in one of these two. So if we think about it, okay, if you want to be, if you're really sure about this area, and if you want to be sure to get triggered when price comes down here, you could probably cover this. I don't like this color. Sorry, guys. Let me change this before we continue. What did I do? Of course, I'm going to do that, right? Let me just leave like this. So if you're sure about this, and if you wanted to make sure that you're triggered on this move here, you could probably like set your entry on the first demand, and also make sure to cover the second demand here, correct? So you want to be sure that you want to enter like when price comes back like here, right? Going down here. So if you want to make sure that you get triggered, you could like maybe set your entry there and price would move up from here. Okay. But like if you want to be okay, like the pip stop is too large for, yeah, sorry, I changed the color here. But so if you're unsure and the stop loss is too large to cover these two areas, you could also just set your entry down here, because we have the confluence that there is a inducement to this one below, and this is the last 1 minute demand also. Okay, so you could probably like set your entry down here instead. Okay, like this. And then when price comes down here to mitigate this area here, and maybe like give a little flip, and then it would come down here again and probably going up. Let me fix this. So like you could probably just set your entry up there, or you could cover the two areas, but always make sure that your stop is well protected below the last low. You don't want to be entering and putting your stop loss like here, for example, or like not covering that low because you're like, oh, I think this is gonna go. I think it's gonna go my way, right? It's always not better. You have to always cover that low, because you don't want to just be stopped out because you didn't do your job. Okay, your job as a trader is to manage your capital. Okay, it's not just to be entering trades. Okay, so this would be the risk entry. So like you're just gonna be setting your limit entry either on here, covering the two, or on the second one, targeting up, right? And of course, like, because if you choose to just have your stop loss a little smaller on this lower one, you're gonna have more profit, because just by changing it like from 6 pips to 2 pips for your stop loss, it makes a huge difference. But like if you decide to have a like a smaller stop loss on this one, you probably sometimes you're not gonna get triggered, and the guy that put his stop loss like a little bigger like that, he would probably get triggered a lot more than you, and yeah, you would miss a lot of trades because you're trying to be a little more greedy with your profits, and he's safer. But some other times you would get like double his profit because you enter with a smaller stop loss. Okay, so that's risk entry. Like I said, you pretty much know that this is the last zone, this is the last demand here that price should hold if it wants to continue going up, and you're super, and you have a lot of like positive confluences that price should hold there. I'm sorry. So now let's talk about the confirmation entry. Okay, again, right? We had the move here, and we had the inducement to this area. So if we want to be more sure about this area here, we would wait for a confirmation. Okay, so our confirmation entry pretty much means that you want to wait and see if inside this zone some of these 1 minute zones will hold price, like, because remember, like, we have the CHoCH and the higher highs and break of structure, and when price is coming back down here, it's making lower lows and lower highs, correct? So if it breaks this low here, it will pretty much be coming here and break the low. Okay, so you don't want that. You want to wait to see if price will change the direction to the upside after the lower lows and lower highs. So you pretty much want to see, okay, price came here, and then you mitigate the 1 minute. Maybe it made a flip here, and it broke to the upside, came here. Oh, now it starts to make higher highs again. Okay, so let's just jump into this example here again. So let me grab one of these guys here. So here, right? I'll just use so we had the mitigation of the 1 minute demand here, and then price pushed up. It mitigated it reacted to the supply zone, right? And then it reacted here, making this little push down. It created another inducement to that zone down there. Let me make this smaller. I'm just gonna delete this because it's gonna be too large. So it flipped, and it created this inducement zone to the extremes here. So it pretty much left this demand entry zone for you to take your longs from here. Okay. So I hope you guys understand what I'm doing. Remember, right? As price is coming down here, it's making lower lows. And here we had a reaction, which was a flip and a break. So this would be a CHoCH. So this right here on top of this one, this is the nearest point after the reaction. So we had a change of character here. So when price breaks this green little box by 1 pip, that's already your CHoCH, correct? So now you have another confluence that price is holding here, because we know that price may want to continue going up. We have a mitigation of this demand, a flip, a CHoCH, and now you can just take your entry from here. So you could enter on the edge of this zone. You could enter on the 15 minute, the 50%, or on the extreme. Let me try to move this guy here. So like this is I think I said something about this type of entries here. It's pretty much when you drag this on, this is how is this called, the GAN box. As you can see here, let me open so this is what I use, the 0, 0.5, and 1. So this is just mean that this is the 50%, and that's the 0 and the 1. Okay, so if you guys want to grab the settings, it's pretty much just like how you want to enter your trades. Let's say you don't really need that, but it's just good to see if you can get a better price, or if you don't want to be. It's pretty much like if you want a more profit, you would like enter down here, because this would be the extreme of the supply candle, or you want to take the longs from the 50% of the candle, or like enter on the edge, which like most of the times will get you like triggered more often, because sometimes like if you want to enter like down here, price would come here, maybe mitigate it just the edge and go without you. And because you wanted to squeeze more profit, making the stop loss a little smaller, you weren't triggered on this trade. Okay, so that's the downside about trying to change this. So what I do is, because I have a max pip for the stop loss at 6 pips. So my max pips for the stop loss is 6 pips. So sometimes if the candle is too big, I will draw my, let's say I have a candle right here, right? So I have a candle here, right? So I draw my zone, correct? But like this, like let's say that if I enter here, the stop loss would be 8 pips, right? But because I have a max stop loss of 6 pips, I would just like adjust my price until it's max at 6, and then I would move this to make sure that I cover the lows and I have enough space to get the longs. Okay, so and the same thing you can do is let's say we have another let's say we have another supply here, correct? And you're trying to take longs. So sometimes, like because I have a minimum of 5-to-1 like target risk reward, I want to take at least 5 Rs for every trade I take. And like let's say that like to get here, like the 6 pips, I would only get 3 Rs to that next supply. So what I do, I'll just adjust my stop loss to make sure that I'll get 5 Rs at the next target area. Like I hope you guys understand what I mean. Let me draw something here. I think this is gonna make it easier, right? So like I'm taking my longs here. So I want to make sure that when price, I want to make sure that when price comes to trigger me, that I would get at least 5 Rs at this next supply, which would be my target. If I enter here with like let's say a 6 pip stop loss, and that only gives me like 2 Rs, 2 rewards to my risk, or 3 Rs, I'm not gonna be taking this. I prefer to draw to enter a little lower and make sure that I get a 5 R when I target that. Okay, so I hope you guys understand that. Let me just, because we have a lot to cover still. I hope this video is not too long. I'm gonna try to get a little faster. So I hope you guys understand, correct? So the confirmation entry, you wanna wait for a mitigation, maybe a flip, or just a CHoCH. We're gonna be talking about the strategy later, like things that you need to be watching for. But you're waiting for a mitigation of the 1 minute zone. Maybe it's even better if you get a flip, and then you had a CHoCH because it broke the fractal high there, and then you could enter here. All right. So and then it went up. You see that it's kind of similar to this, right? We had inducement to here. We had inducement that created here. We had a break, a flip, a break, and an entry. And the same, right? Mitigation here, a flip, a break, and the inducement created for this zone below to go up. So sometimes if you are a swing trader and you wanted to enter on the 15-minute, you could enter here. So you don't want to wait, but your stop loss would be probably like a bigger, maybe you have like a 10 pip max stop loss, so you could enter on the 50% of this zone, and you would target the high there, right? So, but this is for another session. Okay, guys, so I hope you guys get this idea here. So let's continue so you guys can get more examples. I'll just, let me, now just erase these guys here. Okay, right? So now we have the example 2. Okay, so now we took the longs. Maybe I'll just put an entry here. We took the longs inside here on the 1 minute, and we targeted. Maybe we took like 80%. We also gonna be talking about like how to manage your trades later, but maybe you took like 80% of your size here on these highs because you're not sure if this would break, and then you held another like 20% all the way up here. Okay, so that was our longs. Super cool, right? Like maybe this took like 2-3 days or maybe 2 days to happen, and then you went here. Okay, boom. So now we had a mitigation, first reaction to that supply, then it came here, it made like a fractal break to the upside. Okay, and right here, so now we're looking at inside of this 15-minute zone with a 1 minute supply inside of the 15-minute zone, correct? All right, so as price pushes higher here again, it's going higher. So this is what you're gonna be seeing on the 1 minute. All right, so like you see this first sorry, let me see here. Yeah, so you see this first reaction here, and then price comes back here, and then, so let me just stop here for a second. So here, correct? The 1 minute is going here, and it reacted to this 15-minute zone, and it's not inside of the 1 minute yet that you have your own. I personally, that's one thing that I do. I only take trades that also respects the 1 minute. As of today, like that's what I suggest you to do, because yeah, it's not worth it to be just taking the 1 minute CHoCHs anywhere or 1 minute reversals anywhere. So that's one of the another confluences that I use for the trades. So let's continue here, right? So as price comes here, correct, and like on the 1 minute, you would see the first reaction here, right? Like you would have your first CHoCH. Let me drag this guy here. So this was your first fractal, right? So when price mitigated and broke this nearest low here, we had the first CHoCH. So you see like the confluence that we use, like we're still on this bullish here, correct? We didn't mitigate the 1 minute, so we don't know yet if price will continue to going up. So like when you first have your CHoCH down here, right? Price might just be coming to mitigate like this this demand down here. Look at that. So if you try to take like your shorts from there, because you already mitigated this area, so I want to be early on the shorts, right? Because price might react to this coming back down here, so I'm gonna be early on this, and you go and take your shorts here, right? Because you saw that price gave your bearish CHoCH here, but you weren't watching that it only gave the CHoCH to mitigate this demand down here. So you would be trying to take your shorts from here like this. Let me see. So you would cover here, and you would try to take your shorts, and you would probably get burned. I mean, you would get burned because you would break your supply and just continue going up. Okay, so that's one thing you don't want to do. Like, you got to make sure that every time price is reversing to give your entry, that it's not just reversing to react to come mitigate demand in this example here, right? Because we are reacting here, going up, going down. So you don't want to be taking the shorts here after it mitigates down here something on the a demand that was unmitigated down here. Okay, so that's like, keep making notes of these little things, that because these are the stuff that's gonna save you guys a lot of losses. Okay, so let's continue here. We are not, since we already know, even though we had the CHoCH on the 1 minute here, we're not gonna be taking shorts from here, because we know already that we haven't mitigated that 1 minute supply yet. We don't know if this is gonna hold. Okay, so now, right? Okay, so price comes all the way up here, boom, and it breaks our last supply zone on the 1 minute. So now that it already broke the 1 minute supply, that's another confluence that price may still wants to continue going up from here. So we already know that it didn't hold this supply area didn't. This is the first signal that it's not holding. Like it could still, like I said before, price can, like the market can do whatever it wants. So we are just gathering confluences for us to enter a trade, correct? So this is the first signal that, like, this supply here, it's not holding, correct? So okay, so we're not taking any trades here, and like, because even like, let's say now that you saw here, right? You saw that this broke, it could possibly give you another like entry down here. That's where people get so burned, because they think that they can just continue taking the like entries anywhere, and they don't have any confluences for their entry. And possibly on this this time here, you could have a good, you know, and this, I don't think I already said this, but this is the worst thing that can happen to you. It's for you to have a lucky win. You would enter here, right? You don't have any confluences because price already broke your supply and everything, and you want to enter here again because, right? Because you had your CHoCH. So you had your CHoCH here to the downside, correct? Because you made a fractal high, pullback, break, and a CHoCH. So you enter here, and probably on this time here, you were lucky enough, and then you had a win, correct? But like, this is the worst thing that can happen to a new trader, is to have a lucky win, because then now every time you don't have your confluence and you want to take a trade like this just because it happened once and you think it's going to happen every time, but it's not, correct? So yeah, so we're not taking this. So I'm just going to delete this because we already know everything. And now we're not taking shorts from here because there's nothing holding price. So this is already gone. We're not taking any shorts because price, the overall order flow is bullish, correct? So this is gone. Okay, let's go to the next example, which is number 3. Hope you guys are still with me. This is a very good practice, and I hope you guys are learning something from this. Let me just delete this last one here. Okay, so continue with the order flow. Now, so as price pushed on the 15-minute pullback and pushed again, so you can see that on this leg here, on this push, there was no liquidity, there was no inducement or sweep zones. So if there was no sweep or liquidity here, we could probably be sweeping the low of this one. And right, remember what I said? Because on the liquidity concept, we think that like, oh, now we're gonna have a CHoCH and we want to take shorts from here, right? Because we had the change of direction, but it doesn't mean that every time that we have a change of character that we're gonna be going down from here. So that's because overall is bullish. So at this time we could probably be sweeping liquidity. So how would it look on the 1 minute here? So here, right, on this leg going up, we probably, like, we had 1 minute come here, make a higher high, it swept this 1 minute demand zone and push high again, made a lower high, and it pushed up again. Okay, that's gone. That's right here. Okay, we're looking at this area, which was here. As price came back down here, we could probably be looking, because on the 15-minute we know that there's no inducement or liquidity taken here yet. So when price is going down here, we could expect that this 15-minute zone wouldn't hold, because we know that price is bullish and then there's no inducement or liquidity being taken here. So as price start coming down, so we probably know that this zone here is not gonna hold. And what price do is it comes back to this extreme 1 minute demand here, which would be below this low here. So if price would just come to mitigate this demand that wasn't mitigated before, and we would make another, right? So I'm gonna use another example now. And price comes here and pushes up. So guys, I'm using these examples just now. I didn't plan on it, but I've seen like for many years how price moves. So just bear with me here. Okay, so right here, right? Let me just move this a little to the side. So you're ready? So price broke this 1 minute demand and it broke this 15-minute demand. And what it did, it came to mitigate it, this 1 minute demand that was resting below here, below this low, correct? So it came here, the same thing. Price came, mitigated this, and right away it pushed up again, and it flipped this zone. It reacted to this supply, this 1 minute supply, and it reacted and it pulled back and it broke the supply. So it broke this this supply here, and again, right? Let me draw another. Let me make this a little more visible for you guys to see. So it reacted to this supply, and then there was another supply here, correct? And what price did? It broke that supply too. So it came here, it didn't, and like when it came down here, it left inducement to this extreme, and then price pushed up again, and it would be like, oh shit, I missed this trade, I didn't get triggered, price would just go without me. But it was just reacting to this other supply, and then it reacted, and then it pushed again and broke that supply. So remember, like, what does this look like? Same as this. You see, on the 15-minute, you're gonna be looking at the same thing on the 1 minute. So price created this liquidity here, this inducement zone, to then we would grab our entry zone. Boom, you could enter on the edge, the 50%, or adjust your entry to make sure you get triggered on this trade. So let me just, sorry guys, this is a lot of information and like I said before, like as we are doing analysis and trade recaps every day, you're gonna be a pro at this. Like I didn't learn all of this overnight, and this takes time, but you're gonna be learning like all of these setups and like types of entries and everything. Okay, so this is how it would look like. You would set your entry up here, down here, correct? So this would be another confirmation entry, because you don't want to be taking risk entry like here at this 1 minute. You're just reading price action, like, oh, so it just came to mitigate this and it continued pushing up, so it's probably gonna continue going up from here, right? But you don't want to be taking a risk entry, because price could just come here and come mitigate something here and then continue down, correct? Or maybe not even, like it would break here and then just do a little push and come down here to maybe mitigate a demand, and then continue up. Okay, so like most of, I would say at least 80% of my trades are confirmation entry, and the rest is risk entry. And if you're at the beginning of your learning how to trade, I would, in the beginning at least, stay away from risk entries, because it's very hard in the beginning, because you gotta be like extremely certain where price will stop. So if you want to avoid getting a lot of losses in the beginning, you could probably just start taking the confirmation entry every time. Okay, so again, let's go to the next example. Hope you guys are getting this idea. Remember, right? So this we took longs from the sweep of this low. Let me just erase these guys. And this is number 4. Okay. So at this, right, this is another example. Remember that on the liquidity section, we had this equal highs, and the sweep was just to mitigate it something here, and then it gave us a CHoCH. So now that we price respected the 1 minute, now we have more confluence, because okay, so price is respecting the 15 minute and the 1 minute inside of the 15 minute here. Like the 1 minute would be something inside here, right? So now we have this, like, okay, so we have a confluence, and now we have another confluence because price gave us a CHoCH down here, correct? And now we have another confluence because price broke these lows too, correct? So we have 3 good reasons to look for shorts from here. Okay, even though everything is bullish, we could just be starting the shift to maybe come somewhere down here to pull back, right, to continue the move up. Okay, so now, so as price mitigated the 1 minute supply, it pushed down and it didn't give you an entry. I was like, oh shit, I missed this, because I thought that price would come here and give me the CHoCH, and it would come back here to give me my entry and go down here. So like, it doesn't always happen like that. And again, right, you don't want to just be looking for 1 minute CHoCHs like on a counter trend. Okay, you want to make sure that you are aligned at least with the internal and the swing. I mean, at least the internal structure for you to be taking like 1 minute entries like this. I don't usually take 1 minute entries unless I have a lot of confluences, but that's we can discuss this later. So after we had this push here, and you thought you wouldn't get an entry because price just melted and it broke and it came like down here. But now, like, we're using multi-time frame analysis, correct? You go to the 15 minute, okay, now we have a CHoCH here in a breakup structure down here. So here, after we had that break, we could probably be looking, like, now you would have 2 options. Remember, I think here you would have the risk entry and the confirmation entry, and same here, right? Now you have 2 options. You can take the risk entry if you want, right? It also depends if price came to mitigate something down here. So it's probably better, like I said in the beginning, if you're not sure, if you have any doubt, if price came here to mitigate something down here first, like if you have any doubt, always go with the confirmation entry. So always go, okay? Like, so after we had the CHoCH and break down here, so this push here created this supply, correct? Remember, because we had a fractal CHoCH, it created this supply. So when we had the break here, you could possibly be looking to take a risk entry up here, and so I'll just break this box. So you could possibly just set your entry here, covering the highs, and then it would be, oops, what did I do? think I messed up. Okay, let me put this again. So you would enter here, covering the highs. And so right here, right, you would be entering there, and you could be looking to set your targets to this next demand, correct? So you could either do that if you want, taking risk entry. That means just setting your entry order at the highest point of this move, which would be here. Or if you want, you can wait, because I'm not sure if you came to mitigate something down here, correct? So like if you want to be sure, just wait for another confirmation entry. So like you would have the CHoCH here, price would come to take your trigger for your entry. Let me just change this so you guys can see. So that's not your entry. So this would be the fresh 1 minute supply, making a supply chain, right? A mitigation here, came back here. This was the extreme of this move. So it came here, respected this 1 minute again, correct? And gave you a CHoCH. Would be another, sorry, so it gave you another 1 minute CHoCH here. And this would be your confirmation entry. And you could enter here. Okay, boom. So you can enter like that. So just again, right, for the confirmation entry, because this push created this fresh supply, and you want to see that this will hold, because like you want to see that we're not just like coming back here to mitigate something here and continue up. So you want to see that on this reversal pattern, this will hold. So you wait for 1 minute, like a change of direction, to then you enter on here. Okay, so that's why our strategy is so powerful, guys, because we are looking at at the higher time frame, but we are literally entering trades as scalpers. So like for example here, right? So like you're entering like inside of this supply area here with a like 3 pip move, and like maybe you want to get out here for 6 hours, or like maybe take 50% and hold another 50% for like 15. Like this is insane, you know? Like, and we do this every week, every day, you know? So this is how powerful our strategy is. Okay, so let's continue so this doesn't drag for the crazy long. Okay, so let me, another and last example we're gonna be looking at. So we already took let's see here. So we took the longs from here, boom, like targeting that highs, and now I need a short one. We took shorts from there, targeting the lows there, right? And now we approached this last area. Okay, so you see, that's why we keep the same, we pretty much trade the same pairs every day, because we want to be looking at the history and like what price did all this time here. So we already know, because we look at this pair every day, that here we had a sweep of liquidity, right? So price already like swept liquidity here. So this is a very high probability place that price could possibly hold to continue up from here, because we had this sweep. So price, I see it as price already attempted to break this low. Now it pushed up again. Okay, but here, correct? So now price is pulling back down here. So this would look like this on the 15-minute, and it would look like this on the 1 minute. Okay, so price is going down there. So okay, Marcos, so since we have this high probability zone, that because we had the sweep of liquidity, we could just take a risk entry here, right? So like we could just enter with our price. I mean, we could set our order here, targeting the highs or the next highs, or even breaking these highs here. But what happened? Remember, you need to be looking at both sides of the chessboard. In this case, the charts, right? Price, like you don't want to be looking for risk entries here, even though this is a high probability zone that it might hold, because we already reached the supply zone. So because like this is so extended already, this might be the time that we're gonna be looking to have a deeper pullback, correct? So even though this is a high probability zone and we are pro order flow, we already mitigated this, correct? So we don't want to be taking risk entries here just because of that, correct? So that's one of the rules. So that's why we have everything. All the strategy is on paper, and we don't guess. We don't need to guess anything. Everything's already set up for us to succeed. Okay. So as price is coming down here, so we had this fractal high and then a break. Okay. So what we want to see? We want to see this demand, this last demand here holding, because if we break this demand, since this already swap liquidity there, so there's no another liquidity to be taken here. So if we break this demand here, we're probably gonna be starting going down. Okay, so what do we want to see inside of this 15-minute zone and on the 1 minute? We want to see another change of direction inside here. The same way we used to take, we took the 1 minute trades from these other examples we had. Okay, so as price was coming here, probably we had like a small 1 minute reaction. Price came here, mitigated this 1 minute, and again, right? And in this case, let me do another type of entry that you will probably see. So like as price like came here, it made this like equal lows, and then it came here, boom, mitigated, and we had a V-shaped reaction. A V-shaped reaction that we call on this strategy, the smart money concept, is just like a super nice push, right? Like it's a clean rejection of that price. You always need to think about liquidity and price and orders and money moving the market. Just by having this push up here, like that means that there was a lot of money and orders inside of this zone. That's why it made this push up. Okay, and so now we know we had these equal lows here, the same as this. You see, like as we see the same patterns on the lower time frames and the higher time frames, equal lows, equal highs. So it came here, mitigated, boom, and then we had I'll just use this, make it easier. We had another CHoCH here on the 1 minute. So we had the equal lows, mitigated, boom, we had another push to the upside. So now we had a rejection of this 1 minute zone. Price didn't break this 1 minute, and he also respected the 15 minute. Okay, so now we have a confirmation entry at this high probability demand, correct? So I'm gonna show you another thing now. So now now we have this fresh entry at down here, correct? So now we can be looking to enter like with our longs down here, and then we can then target somewhere like maybe like the next high, or maybe you can hold to see if there's another supply area, but it doesn't matter, right? Because we're already 6 hours, whatever. So, okay, price came here. So remember what I said, since we are pro order flow, like even though the 15-minute CHoCH is up here, right? So like pay attention because this is important as well. So our 15-minute CHoCH is up here, which would be all the way up here, correct? Remember, like this is a larger structure, which is this fractal pullback. Let me make this straight. So because we know that this is a high probability zone and we had a 1 minute CHoCH, so we could be entering on this 1 minute CHoCH even though we don't have the 15-minute CHoCH yet. So we are literally just entering early, like expecting that we would have the 15-minute CHoCH. Correct? I hope you guys understand what I mean. Like we are entering like early on the move because we're expecting that price will come here and give us the 15-minute CHoCH all the way up there. So we would have, first we would see the 1 minute CHoCH, and then when price comes here, mitigate, and going up, we would see this move here, that would give us the 15-minute CHoCH. Okay? So this is a very like nice way of thinking. So you could be looking at to enter here, and then boom. So price just went all the way here. And on this case, it didn't come all the way to give you the entry, like down there. So instead, it created the inducement to later on, sometime later, to come to mitigate it here. But also, price, you would have your entry here, and price could have, let me just erase this. Price could have given you the 1 minute CHoCH and the 15-minute CHoCH right away without the pullback, and you would still have your entry down there. You would enter in here because you know this low here is now protected, and this is the last point of this move, and you could probably enter here and take longs, right? Targeting the somewhere down there, up there. Okay, so again, right? Price respect the 1 minute, came here. We had this super crazy now reaction, which is now we had the 1 minute CHoCH, and now we have the 15-minute CHoCH. So this is like a super high probability trade that we can just enter on the edge of this candle here that we were gonna see on the live charts. We're covering the lows, and we are targeting for at least a 5-to-1 risk reward. Okay, super cool, super nice. I hope you guys understand this whole concept. We went a little further than I would expect. I thought this would be a shorter one, but I pretty much gave you like many situations and setups that you would probably see on the real charts. So I think this is great. I wish I had someone like us here from Neo Trading Club teaching me when I started. This would have saved me so many pain and work, but I'm happy that you guys are learning this. Okay, so again, if you guys have any question, I'm glad to make even further videos explaining this concept. And if there's anything that is unclear about the confirmation entry and risk entry, you let me know, and I'll see you guys on the next time. Thank you so much.